Shares of Broadcom and Meta platforms are higher on an expanded partnership deal to develop custom AI chips. Mackenzie Sagalos is here with what that move signals about Meta's AI ambitions in today's Tech Check. And also, Christina Partsenevelis is diving into what it all means for that Nvidia trade that we just mentioned. Mac, we will start with you.
So, Tom, this is Meta doubling down on its custom AI chip ambitions with Broadcom as a key partner. And it starts with a 1 gigawatt deployment with plans to scale to multiple gigawatts from there. And that is a massive commitment showing just how serious Meta is about building more of its AI infrastructure itself. This deal also highlights how Meta is taking on the cost profile of a hyperscaler without really having the same business model. The company is spending up to $135 billion this year on CapEx, most of that going to AI, 31 data centers in the pipeline, and it's been cutting major deals across the stack with Nvidia, AMD, ARM, and now even more deeply with Broadcom. But unlike Google, Amazon, or Microsoft, Meta's not monetizing AI through a cloud. It's not selling compute to outside developers at scale. So the clearest return on all of this spending is still the core ads business, using AI to make ad targeting better, ad creation easier, and measurement more effective. And that's why this Broadcom deal is also so revealing. Meta is trying to turn infrastructure efficiency itself into a competitive advantage. But that means the value proposition to investors is that stronger ad performance is enough of an ROI to support one of the most aggressive buildouts underway in tech today.
Now, it's interesting as well, because with Meta platforms, there's a perception right now that they are the laggard in this whole kind of hyperscalers race, that they are trying to emulate some of the best practices that we've seen from some of the other big mega cap tech players. Google is probably the one people are trying to copy the most, at least over the last 6 or 9 months. So if there is a playbook that Google/Alphabet has that Meta is trying to accomplish best practices of, just how far along are they in that process?
Well, on the chips business, Google has been working on that in-house TPU for 11 years now. And Meta only just started working with Broadcom since 2023. But this is an area where CEO Mark Zuckerberg is going all in. Just last month, they announced 4 new models that are, more power efficient. But what's really telling here is the model race. So right now, Gemini tops all of the benchmarks. But what just came out last week from Meta was their first closed model. This is a proprietary model. They've always been open source before this. And you got a note from Deutsche Bank this morning saying, what, this is really a reflection of the fact they're looking to monetize AI through not just their ad strategy, but also their wearables division. And part of the reason why they may be transitioning from open source to closed source, not really caring that they're not beating the frontier labs on these benchmarking tests, is because it's all about that wearables division, these consumer-facing products, and saving the best AI for themselves.
It's a double-edged sword, that kind of a bet on yourself, closing the system off for sure. So we'll see if that competitive landscape changes. Mackenzie Sagalos, Mac, thank you very much for that. All right. Now, Christina, let's talk about what this all means for the chip giant of all chip giants, and that's Nvidia.
Yeah, so Broadcom is really starting to look like a real second player in AI. We often used to speak about AMD, but Broadcom now has 6 major custom chip deployments with names like Google, Meta, OpenAI, Anthropic, ByteDance, and then there's a mystery number 6. Some people say it's Apple. On Meta, though, this isn't necessarily a new deal. It's really an extension, but that does matter. It tells you that Meta is sticking with its in-house chip strategy and that they may be trying to pull that particular timeline forward. What we do know is it also shows how embedded Broadcom has really become. CEO Hock Tan announced, too, that he's stepping off of Meta's board into a silicon advisory role. That's a strategic way to stay close to how these chips actually get designed at Meta and where that spending goes. Broadcom is clear this is a multi-year build-out that Mackenzie talked about. So the bigger revenue ramp is likely back-end loaded, more about 2027 story. But now for your question about Nvidia. CEO Jensen Huang keeps saying many different events here and there, the AI pie is growing bigger. Demand is not the issue. But clearly, it's starting to show up, especially at the inference stage where these models actually run. That's where custom chips from Broadcom and the hyperscalers can be cheaper and more efficient. So while Nvidia does dominate training, software, top-end performance, this is where you start to see pressure build. The pie is definitely growing, no doubt, just like Nvidia's CEO says, but it's also getting more competitive. Broadcom isn't taking Nvidia out, per se, but it's starting to carve out the part of the market where cost and scale matters the most. And so that is the fear that we're going to see going forward with Nvidia, is just that competition wrapping up at the inference stage.
So fear and competition for sure, because this is a high-stakes race, in essence, for all of these companies out there trying to carve up their pieces of that pie, the bigger one, as Jensen Huang points out. What exactly does that do to the competitive dynamic? How exactly do these companies then jockey for position? Or is it a zero-sum game, or is it one where the pie gets bigger and everybody does ultimately benefit? How does that competitive dynamic shape up in the coming months?
So often when we see a headline of a company like Marvell working with Google, it becomes a zero-sum, reaction in the market, and then you see Broadcom drop on that news just yesterday. Almost every single tech CEO or chip hardware CEO will try to push that this isn't a zero-sum environment, that the hyperscalers keep spending, right? You had McKinsey just talked about $135 billion of CapEx just from Meta alone. So if they're continuing to spend, demand keeps ramping up. TSMC is spending on all of their equipment, building these chips. Clearly that pie is growing. But yet, often the market doesn't react that way. They're seeing it as an either-or situation, that eventually that money that may be diverted towards Nvidia is going to go to all of these individual hyperscaler custom chips, because the total cost of ownership for deploying these chips is going to be cheaper. And so I think that that's the argument that we're seeing in the market. It's the CEO saying one thing, but the market reacting as it's a zero-sum game.
It's all about the story people are going to believe. All right, investors are trying to figure it all out. Christina Partsinevelos, thank you very much with today's Tech Check as well.